One thing I do know is Januaries have this lovely habit of blowing everybody up before the true trend establishes. In GMI, and I've been writing for 20 years, I've never made a trade in January because January always gives a conflicting signal. And so the signal now is, oh my God, the markets, rates, this is terrible. And usually what happens is it completely reverses sometime in Jan or Feb, and the market then sets its direction. So I never read into Januaries.
In this recent interview on Steno Research with Raoul Pal, we explore how Bitcoin aligns with liquidity trends, market behavior parallels to 2017, and its evolving role as the ultimate liquidity instrument. At the time of this discussion, Bitcoin is trading around $96,000, with a 4% increase change in the last 24 hours and 6% decrease change in the last 30 days. Before we get into this fascinating discussion, don't forget to like, subscribe, and share this channel. Now let's hear more from Raoul Pal.
Okay, so this is from the January GMI. This chart at the top is, let me just get rid of that. This chart at the top is global M2 last time around versus this time around. And global M2 last time around, this time around, it's identical, which is kind of weird. Then we also have beneath it is the chart of the NASDAQ, and that's pretty much identical. So we have a repeat in the monetary conditions, global M2, because the dollar was strong. That's what's pulling back global M2. It also caused markets to readjust. When we look at Bitcoin, we can see the phasing's out, but when you kind of match up the phasing, what happened, it was the 4th of Jan, we had a correction like we're having now, and then Bitcoin went up. And once you match the two, you kind of get a very similar pattern. So what we've got is, and also here's the economic surprises index and the DXY. It's been coming lower. It should drag the DXY, change rate expectations. Julian just put out a tweet this morning about all of that. So everything is here. Fed cuts may change because there's now like 25 basis points priced in. Okay, as a risk reward, there's a decent chance we get something. So it's like all the factors are in play, and whether the market sniffs it out or not, I mean, we got another week until whether we get fuller announcements beforehand or we have to wait for the inauguration and stuff, I don't know. So using the parallel of 2017, I think the bottom is in. I think it happened today. Now, the other outcome would be the outcome you've shown me. But my base case is that using the historical parallel, I think we probably put the low in. I mean, Bitcoin's price action, was ugly today. Let's wait and see. Not that I'm not buying, not selling, not doing anything, but it's either your outcome, which is a sharper fall for longer, in which case it's fully mirroring the M2 drop, or it does what it did last time, which is it prices in the first part of the M2 drop and then dislocates, and it tends to dislocate the rest of the year because there's more speculative flows in the final year. Liquidity should come in. So that's my view. Nobody's withdrawing liquidity except the Fed, which is the dollar issue, right? And so even though, the Fed have been neutral with liquidity, but the dollar's got stronger. So dollar liquidity in the system is the issue. As you rightly say, nobody else is withdrawing liquidity. Everybody's trying to add liquidity. But the dollar is kind of overwhelms everything right now.
As we just heard Raoul Pal discuss Bitcoin's recent market behavior, let's now dive deeper into its role during liquidity cycles and why it's positioned to outperform during economic shifts. Now let's listen to what Raoul Pal has to say.
The one thing I am looking at is it has been the canary in the coal mine for the bond market. The UK seems to have the worst liquidity of all of the major bond markets. And if I look at on Bloomberg, the gilt liquidity index, it is now continually trading higher than the Liz Truss, gilt intervention. So it cannot be escaping the central banks that inflation expectations are stable, and yet yields are exploding higher. And again, right in your wheelhouse, it is telling you, screaming at you, there is not enough liquidity. Now,
Yeah.
and understand they're scared because they've just gone through that inflation episode, and everybody's still angry about it and whatever. So they're reticent to do something. So they're trying to hold on as long as possible before injecting liquidity. But politics will trump all, and US politics is the big daddy of it all. And the US needs to add liquidity because they're about to have the debt ceiling shut down, and they're going to, and Trump has got to show markets going up, people are happy, all of that. And we know how to do that. It's simple. Just jam the pedal on the accelerator with liquidity, and everybody's a winner. On the other side, one of the reasons why bonds have struggled is because China's slow.
Yeah.
Japan, nobody's buying US bonds because they're not recycling the dollars because they've got a dollar shortage, so they can't buy bonds. The US, I think through the back door, and I think it's via the Japanese banks, which are the heart of the Eurodollar market, that there'll be some swap agreement, some liquidity terms for the Japanese, and to say, well, it's to stop the yen, whatever, and really is a backdoor way of giving China liquidity because they won't do direct swap lines. So I think that is to play, and then you bring the central bank buyers back in because China needs economic growth. It needs to drive its growth engine, so it buys treasuries. And as you said, you need the US banking system to buy bonds, or you do what other nations have done in the past, which is force the pension system to own more bonds.
Yeah.
I don't dare say it. Don't dare say it. But probably deck 2025 SOFA futures. Something in the short end of the curve that you won't get killed on, but becomes slightly asymmetric, or even options there. That's probably in global macro land, not a bad bet. I think trying to find a topping pattern on the dollar is hard, but when it happens, I think you can press it because it'll probably evaporate fast. And the other easy bet is, crypto is the ultimate liquidity instrument. So you should be looking at the dip. And I think we put the low in today, but maybe I'm wrong. But either way, if you're looking for some way to express that the market is different, because don't forget, if there is a slowdown, well, crypto will do well because of liquidity. The markets have already sideways traded for a while now. So, that's where I am.
To watch the full interview, check out the link in the description. We would love to hear your thoughts on some questions. Do you think Bitcoin will emerge as the ultimate safe haven? How do you see liquidity cycles impacting Bitcoin in 2025? Thank you for tuning into Only the Savvy. If you enjoyed this discussion, please subscribe, like, and share our video for more engaging content exploring the innovative world of decentralized technologies. SIM swap fraud is sweeping the globe, and your mobile security is at risk. Switch to Ifani and lock out SIM swap fraud and get the most elite mobile protection in the world. Ifani guarantees 100% protection from SIM swaps backed by a $5 million insurance policy. Stay secure with reliable coverage, free international roaming, and unlimited data. Trust Ifani to keep your communications and assets secure. Get military-grade protection, 24/7 concierge service, and a hassle-free upgrade. Click the link below for $150 off. Thanks for watching. Help support this channel and receive exclusive offers from one of our partners located in the description. We'll see you on the next one.